Presentation, just for a bit of perspective, this photograph is a shot down the shallow open pit mine that we have at the Tarkula project. So you can see it's a very shallow mine. You're looking north to south. It's about 30 meters deep in the north and about 70 meters deep in the south. Just a quick summary for those of you who are not familiar with Barton Gold. Barton Gold is essentially the ASX's only pure play, pure gold, significant scale exploration story. We focused on South Australia because, traditionally speaking, South Australia is extremely well represented when it comes to structure and gold mineralization, and very poorly represented when it comes to actual development of these resources. So South Australia has about 25% of Australia's gold resources and about 2.5% of its production. So what we've done is we've assembled about 5,000 square kilometers of tenements in this central Gawler Craton. And with that, essentially the substantial majority of all significant historical gold producing and gold exploration ground. So that's given us sort of two strategic bases. One, a 1.1 million ounce resource base on which we are building, and two, ownership of the only gold mill in the region. Now, our objective here is not to run back into operations. We're really looking much bigger picture. So we're pulling back. We're very well capitalized. We're looking at large-scale exploration to set up an actual large-scale, district-scale development opportunity. The objective is to, in the future, reanimate our central Gawler mill, but to also have a second mill down at Tonkillia. Importantly, on the corporate side, we've built a very, very strong team. We are very well capitalized, and we are very, very busy. So we've just finished about 6,400 meters of drilling right now. We'll be back in field in around August, and we're looking to do about 20,000 meters of drilling this year and cap off the year with a significant resource update. When we look at the development strategy, it really helps to break up our projects in sort of a northern and a southern hub. And that northern hub we sort of define as the radius around our current infrastructure. So in this vicinity, we have multiple explorers who are now aggressively in there looking for gold as well. It gives us a bit of an option to look at toll milling in the future or looking at some sort of consolidation in the region. But where we're really focused is in our southern hub, and that is the Tarkula and Tonkillia projects. The reasons we're focused there are, well, one, we have a 1 million ounce resource base there. That's very helpful. We've got about 100 kilometers of shear zones that have seen very, very limited exploration historically. And we're focused on shallow, open pitable mineralization. So we can stretch capital much, much farther in terms of outcomes for investors down here than we think we can pursuing deep underground gold in the old Challenger mine, which we do own in the north. So that mill does give us some optionality. As I mentioned, we'll be looking to build a new mill at Tonkillia. But once we figure out what our big picture development plan is in our southern hub, we have the opportunity, if you will, the option to start a stage 1 production, uniting our current mill with the Tarkula project to generate some cash flow and become a producer, generating cash flow, change our financing profile, and then approach a financing and development of a new mill from a much stronger position. Innovation, I won't dwell on this too much. Innovation, R&D is a really big component of what we do. We are essentially trying to catch up this region from 30 years of modern systematic work, which has not been done. So we have an exploration mandate, we have a discovery mandate, but we also have a build the what the hell is going on in this region picture. We have had some very strong successes with this. We just announced we found several new gold and copper targets in the region using Sensore's AI and ML-driven technology. That's sort of phase 1 application of that work. And we've also made a number of new discoveries of gold mineralization. What have we done with all of this since IPO? We IPO'd in June of last year. We found several dozen new gold and copper targets. We have identified 3 new gold zones. That's about 2 kilometers of new gold mineralization, or about a 66% strike increase for us in the past 12 months. We've also been really leaning into our relatively unique South Australian identity. We've built a very strong leadership team in South Australia. We're very lucky to have Ken Williams, the former CFO of Normandy Mining, join us as chair, taking the chair from the 1st of July. And we've also built our own in-house project and geology teams based in Adelaide. We have also been very blessed to have some very strong support from the South Australian government. And this is one area that I'll also take a moment to note. South Australia has been overlooked for a very long time, but the South Australian government is extremely supportive of aggressive but systematic explorers. And we are announcing today, it's just been released to ASX, so you're the first people to know, we just received another $595,000 in exploration grants from the South Australian government today. So in the past 12 months, we've been awarded almost $1 million in grants from the South Australian government. So we've got a lot of work going on, a lot of drill assays pending, and we're also working on some cash generative initiatives to make sure that while we are destocking capital, very carefully exploring and finding gold, we're also restocking capital internally without coming to market and diluting our shareholders. Just a quick note on the corporate side before we dive into the assets. We have a relatively tight share structure and register, about 175 million shares, relatively limited amount of options that are actually work for these, earn these options. It's not free money. Our market cap is about $35 million, and we have an enterprise value of about $25 million, about $10 million in the bank. Very, very strong management and shareholder, management alignment with shareholders, and a board of directors and management team that have a broad set of skills and experience. Our objective is to not just be an explorer, but to basically maintain forward momentum and be in a position to take these assets through development when we decide it's the right time to do that. Jumping into the assets, we'll go straight to the southern hub. That is where we are focused. It's very easy to lose the scale of these things when you just see them on a map. Tarkula and Tonkillia together are about 2,500 square kilometers of tenements, and we've got about 1 million ounces between the two of them. Importantly, the work that we've done, both pre-IPO and post-IPO, has demonstrated that there are multiple very large-scale mineralized systems across these tenements. They're only 70 kilometers apart with very limited historical drilling, so we're the first people to sort of hold these assets together with a co-exploration and co-development perspective. We have been growing them very quickly. As I mentioned, we are now aggressively drilling to look at further growth this year. Tarkula is very interesting. Its background dates back to around the same time as the Kalgoorlie gold rush in Western Australia. So around 1893, some people find some gold, everybody goes crazy. And in the early 1900s, essentially, people are artisanally mining gold at an average grade of around 40 grams per ton from what is currently our mining lease. Since that time, there's been very little systematic work here on our mining lease. You can see there's a picture of our open pit that was mined during 2017 and 2018. A high-grade open pit. It was producing an average of about 3.8 gram per ton during 2018. But by and large, there's been no systematic work around the region. So our work has identified a number of new structures, a number of new shear sets, which we are starting to work on building out. When we look at that open pit, and we'll kind of start small here and build out to what it means bigger picture. This small open pit is about 70 meters deep at its deepest point in the southwest. And this pit sits atop the Perseverance shear, which is the main mineralizing structure there. Now, this is a pit that was operated briefly during 2017 and 2018. As I mentioned, it was producing sort of between 3 and 6 grams per ton during 2018 and going through our mill. Didn't have a lot of drilling underneath or around it. So when we took control of these assets, we put some holes underneath and we put some holes in along strike, and lo and behold, we discovered an entirely new gold zone called Perseverance West, immediately adjacent to the pit wall. So when we look at this, it's a very exciting opportunity. You can see some of the interesting assay results we've had in drilling there. It's an interesting opportunity to simply look at a basic pit extension that we can pair with our existing mill, which has processed this ore previously. And that gives us some interesting optionality in terms of looking at generating cash flow internally, but also a bit of an insurance piece if, for example, the markets are closed and we want to go into operations or raise capital. When we step out now and actually look at the mining lease scale, you can see the open pit here on the left side of the screen. We're looking at something now that's now about 4 kilometers wide. And so this is a mining lease that we hold. We brought in a lot of new technology into this region, and looking to beat the challenge of exploration undercover, one of the things we did was bring in very high-resolution aeromagnetic surveys, and for the first time we can infer structure through cover. We've identified a few areas that we think constitute lookalikes for the circumstances that created that high-grade pit. So the opportunity, we believe, is that this is actually a cluster of shallow high-grade mineralization sitting atop this structure. And that is where, when we step out then and look a little more sub-regionally, now we're looking at a 15 to 20 kilometer long section of the western end of our tenements. we commissioned HiSeis to do a remodeling of the seismic in the area, and this gave us some very interesting perspectives. What we identified was the Perseverance shear, again being the controlling structure of the Perseverance mine. It passes through the Tarkula Basin, which is the mineralizing basin there in the central Gawler Craton, and plumbs directly into a Hiltaba intrusive structure. So this is a granite intrusive. These are the same engines of growth that you find, or the engines of mineralization throughout the Gawler Craton. The engines of growth and mineralization for Prominent Hill, Olympic Dam, Carpatina. We have these same things under our projects, and what is more interesting is that we identified a dozen or more parallel and cross-cutting structures that are perfectly analogous to this structure, which were previously not recognized. So this is what shows us that there may be an opportunity here not to have one cluster of shallow high-grade open pits, but multiple clusters of shallow high-grade open pits. And where one of these structures comes to surface is the Warburton Target, which interestingly we had already identified as a priority target. Anglo Gold put a hole in there in 1997 and drilled 16 meters at 3.5 grams per ton, essentially from surface. And they didn't follow it up. And if you ask why, look at the gold chart. The US dollar gold price in September 1997 was $325 and falling. So that's not a compelling intercept in 1997. It's a very compelling intercept today. So it's one of these things that gives us multiple reasons to go back and take a good hard look at these. So the idea of having a cluster or multiple clusters of high grade then becomes very interesting when we look at, can we pair this with large-scale baseload mineralization? This is where we look about 70 kilometers south to the Tonkillia project. What we're looking at here is another 1,300 square kilometers of tenements with about 50 kilometers of large-scale shear systems. So these are sort of analogous to the Kalgoorlie style shear zone systems. And where we're focused in the first instance is the Yarrabrin shear zone. So we've got about 30 kilometers of the Yarrabrin shear on our tenements. And in the northwest corner there, that's where we have our 223 deposit. So this is a 965,000 ounce deposit that we announced in November 2020 before we IPO'd. That deposit's about 2.5 kilometers long, just very continuous mineralization. And most of the drilling that was done that informed that deposit estimation was done when the US dollar gold price was between $300 and $800 per ounce. So essentially, it was informed by an artificially restricted search domain compared to the way we look at the world today. We have been going in and aggressively converting numerous satellites into additional mineralization as well. So when we look at this a little bit closer, what we're talking about is, on the left side here, broad, continuous, consistent mineralization where we believed there may also be some higher grade zones which provide some pretty interesting development opportunities. On the right-hand side of the screen, you can see the black outline of that 223 deposit, and all around it were a number of very shallow drill holes drilled in the late 90s, again, just in time for people to stop caring about gold. But drill holes that went through 40 or 45 meters of cover and stopped in mineralization of up to 10 or 50 grams per ton, depending on where it was. So very, very high value roadmap, which we have actually been converting into new mineralization. So post-IPO last year, we were immediately infill drilling. We developed a new geophysical model that looked at remodeling some of the magnetic and resistivity anomalies with magnetic susceptibility in conjunction with actual analog gold mineralization. And we predicted sort of the location and orientation of two zones of mineralization here, which we've called 223 North and Area 191. We drilled those, we validated them, and those have added about 1.5 kilometers of new mineralization. That same model has suggested that Area 51 hosts the same type of mineralization. So we've just finished drilling at Area 51. And the opportunity here is to look at not only creating a significant camp scale opportunity in this area, but looking down the next 20 kilometers of the shear, which is essentially untested. So the same model that predicts that mineralization, which we've thus far twice validated, suggests the same extensions. And this is what sort of brings this whole thing together for us is, we've got this very large platform. We already have 1 million ounces. We already have the only mill in the region. We're bringing a lot of technology in. We've got a lot of clear opportunities. We've been very consistently executing work and growing. And we've got a very strong team with excellent relationships. So the idea here is that we're essentially creating a new old gold district with advanced assets and infrastructure leverage. And if you like this type of story, I won't labor this. This is actually a very restricted comparables analysis. If you look at our true comps in the market, ASX listed, Australian domiciled, continuous open pit mineralization, there's about 8 players on the market. Of them, we're the only one that's South Australian based. We're valued at about a third of our peers on average. And of all these players, we're the only ones that actually own a mill. So if you have any questions, we were at booth 24, but you're welcome to email me anytime, and I'm happy to take your questions. Thank you.
Thanks, Alex. Don't go too far away, mate. You're on the